Hi, everyone. Thank you for staying for the blockchain. This is the last event at this stage, so well done for still being here. We want to be able to talk about different aspects of blockchain, what has got traction, where we're seeing real value being driven, and also where do we think things are going to happen in the future. Thank you so much. So I'm Tracy Rob Pereira. I'm one of the blockchain investors as well and believer for a while now, and I'm working with a lot of different clients in this space. My functional expertise is that I'm a fractional CFO and I'm helping businesses scale from a growth, finance and governance perspective, where regulation is so key, and technology. But what I really want to ask the audience right now is, who here is a believer and investor of blockchain as well? Oh, we can say believer? Okay, but you haven't invested yet. Okay, how much of a believer are you? Now, who is here that actually hasn't done any engagement with blockchain, is just trying to find out what it's all about? Okay, a few of you. Great, so I think we kind of got the audience, so we know who we're talking to. What I'd love to do is ask the panelists a few questions, and when I ask the first question, for you to introduce yourself and what you're actually doing within blockchain, because it's so that we've got a really good panelist in all different aspects of blockchain. So I want to ask the first question to Nathalie, because you're in a lot of different aspects, working with a lot of different clients in blockchain. So after you introduce yourself, is actually to explain where you're seeing the greatest traction.
Oh, wow. Okay, we're going to start that way. Sure. My name's Nathalie Oestmann. I work for Mangosteen Advisory. We're operators that have become advisors. I specifically focus on fintech and crypto. And we have quite a few practitioners with clients across the UK, Europe, and the US. What I find I'm focusing my time on, because of my payments background, I have a payments background, is stablecoins. There's a lot of really good use cases, a lot of really positive momentum. And I find I'm doing two things. One of my current clients is a crypto native company that is wanting to mature to be able to talk to enterprises a little bit better about crypto, i.e. not in crypto native language, which can be very esoteric and make no sense to your regular institution. Or I'm speaking with financial services or even enterprises that are interested in adopting blockchain, stable coins. They're not really sure what they're interested in. They just want a piece of the action. And again, here, they want to learn about it. What does the tech stack look like? Well, who are the different players? Who are the big players, the little players? You know, I don't even know where to look, basically. So I help guide them through that. So your question is, where is the biggest opportunity?
Yeah, where are you seeing the biggest traction?
Okay,
right now?
well, I think I just said it in my intro. The biggest traction right now for me is a use case that's gaining a lot of attention, which is stable coins, and that's mostly because regulation has become a lot clearer. But when I talk about stable coins, there are some ancillary things as well that you can think about, and we're going to get into it, hopefully, but it's things like tokenized deposits. It's things like central bank digital currencies. These are all different ways of putting money on a different rail or a different chain.
Thank you, Nathalie. So now I want to come to Varun. Varun is a big institutional investor, let's just say, into blockchain. So I really wanted to ask, what is your investor conviction when it comes to blockchain companies?
Perfect. Thanks, Tracy. Firstly, I do have to start off by saying I commend that, we nearly have 36 people in this room at 4 p.m. on a Friday afternoon.
You've been counting.
I know. It's really impressive. So many people showed up for blockchain. So I think I'm onto something here. We're onto something here. But my name is Varun, Rekhi. We work at a fund called Speedinvest. We've been in business for 13 years as a venture fund. And I sort of co-lead our crypto investing strategy out there, where we deploy anywhere between 2 to 20 million in crypto/blockchain/DeFi companies. Been doing that since 2019, since before my time. What is exciting for us today? It's actually interesting. I would just put it as one word, which is the infrastructure, where we're spending majority of our time, because we do believe the technology has changed the nature of assets as we see them. And for us, yes, retail will always own the assets, but what we're trying to do is take advantage of the pipes and the highways where the assets will move. And that's the part that excites me the most. We can dive deeper into that, but that's a bit about what's exciting us. And for me personally, been in the space since 2016. I used to be a crypto trading nerd. I definitely didn't buy a pizza with
So you've made loads of money then?
No, I wish. Well, for another time.
This will be a controversial question that's going to come later, but I want to first move on to Richard. Richard's been in the blockchain world for a while. I think he's one of the founding investors of the NEAR Foundation, which is a layer one, right? That was something that I got involved in years ago as well. But I'd love to ask Richard, after you introduce yourself, what is it that you think has been completely underestimated about blockchain technology that we need to be aware about?
Sure, thank you, Tracy. So I heard them introduce this panel as the blockchain panel, and I can remember the time when blockchains were dismissed about a decade ago by some database experts as purely being append-only databases. And so let's kick off with a nerdy joke. I just wonder whether this means that you can only join this panel and never leave it. That may be the kind of way it works. Or maybe actually you can only join the audience and never leave it, which might explain the numbers, as Varun has already commented on. But I can also remember the time when IP protocol networks were dismissed as being just one form of networking, and that it wouldn't be worth adopting them in order to support something like voice, because the economics weren't there. And for a considerable period of time, that was kind of true. I actually sort of helped with analysis for large telecom operators in the mid-90s, looking at that question. But when you have something that is so open to experimentation, that has got this raw capability in this case to give sovereignty of identity to men, women, and machines, and build a reputation behind that identity and allow them to conduct payments at extremely scalable way at very low cost, and much more, beside that, it's a pretty bad idea to bet against the potential of that. And so obviously today, if you look at voice traffic, it doesn't run on the public switch telephone network anymore. It kind of in large part runs over IP. So we've done a complete switch over multiple decades. As I say, it's kind of, in the early days, it moves imperceptibly slowly, and then suddenly it all speeds up. And if you're then sort of switching gears quickly to what Fabric is all about, where as well as working from the very early stages with NEAR, we set up Fabric initially under the brand Farstarter about the same time as Speedinvest, actually, sort of about 13 years old as well. And I would argue they're much more successful than us. But we're backed like 200 different projects. And we kind of started looking at a lot of marketplaces and big data that has now become much more fashionable in AI. And then we were very early looking at digital assets from 2013 and through 2016 and 17. And we've covered investments in the core infrastructure, layer one blockchains, but also things like SoRare, putting kind of football, gaming onto the Ethereum blockchain. But looking forward, I think we want to get to the point where we don't really have blockchain panels, that we're talking about different types of application that happen to use these new capabilities, primitives, Lego bricks, whatever you want to call them. And so that's what we're seeing happening in our portfolio. So we're seeing a new wave. I won't call them more serious than the last wave, but a new wave of entrepreneurs, for example, in payments, like a portfolio company do with a background in Revolut, coming in, and they're not the only one. There's a great company like Spyco, for example, where you'd be hard-pressed to know that there was any quote-unquote crypto involved. We're seeing people on the robotics side who wondered for many decades even, or a decade and a half, what Web3 was all about, what it was for, until they realized it was kind of, oh my gosh, that's actually for us. If we're going to go mainstream with fully autonomous robots, they need to have identity, they need to have verifiability, they need to kind of have their own reputation. Those are the capabilities that Web3 has been building. And we definitely also see it in the AI world as you look at how important infrastructure to support AI is, from the energy to the air conditioning to the real estate through to the GPUs, obviously. And it's in very scarce supply. And so being able to build, to use whichever infrastructure is available to you and have an open, communally owned infrastructure for AI is going to become critically important. And so leaning on the the capabilities of DPIN, the principles of DPIN to drive,
that
would be
say
great.
what DPIN is.
Oh, sorry. Decentralized physical infrastructure. So tokenizing those GPUs, for example, in the same way you might tokenize networking infrastructure, or as we have seen, it's possible to build immense capabilities around, say, Bitcoin and Ethereum using tokenization or form thereof. I think that's another area that's exciting, and probably the most exciting is agentic commerce, but I'm going to hand over to someone else to look at that.
I think it's more than a comeback, right?
Yeah, exactly. I think you've had loads of use cases explained there, and you've seen how much that is actually mainstream, but you may not realize that it's working in the background. And I think that's really key to understand. But I'd love to come back to Varun here now and actually ask, or actually, Nathalie, I had a question for you first, which is a bit of a, let's say, a controversial one, and then I'll move on to you, and you'll understand why. But you have seen that, why did blockchain come along? I would argue that a lot of it is to do with distribution of wealth, as well as the fact that it's meant to take friction out of the system. But now we're seeing institutions come in. I know you're working around stable coins and with tokenization, and financial institutions are coming in as well. This has obviously affected the crypto markets as well, but I want to understand a bit more about how the retail investor can actually see a good use case from a customer perspective, but also an investor perspective. Could you take us through some of those?
Yeah, I mean, look, I don't think it's a very controversial question. I think the pie is very big. I think one of my foundational beliefs is blockchain will fundamentally change the banking rails in the future, and AI will augment it. But so everything that you see today is built on old code, old databases, which you just started, Richard, by talking about, and really inefficient processes in order to move money around. When you can replace that and everything around it, all of the banking system with the blockchain, you start to have much, much more efficient systems, much better ways of communicating, much more real-time activities. Think about the time you have to wait. Not when you're as an individual, you don't have to wait anymore in the UK, but still in the US, and in the US, you may sometimes have to wait to send money to somebody. It's not instantaneous. And so, we're a little more advanced with that. But institutional investors have come in now that regulation is clear and now that they understood the opportunity for that investment, and they have come in en masse and have created products, using crypto assets as the underlying, tool. That has moved markets massively. But there were always market movements before. I think it will bring more stability instead of massive, in the olden days, 10 years ago, you had a lot of what we called token launches, and they were like these IPOs where you would say, oh, we're doing this thing, and it would go crazy, and it would go up very high, and there were lots of excitement about things, but then they might crash very quickly. So the cycles were very volatile, and I think we might be moving into an era of more stable investment. So I don't think that's bad. I think that's very
Sometimes good. Lots of volatility is good in terms of retail investing, right? If you know what you're doing and you're actually understanding the background use case of it. So
I think there's some that will be very sad, but that they can't ride these waves. But there's also something to be. Even in traditional world, you have lots of different tools, that you can use, and there will be products that will be produced for retail investors.
Good, that's what we want to hear. But I know Richard, you're trying to come in, but I'm going to go with. I know both of you like institutional investors, right? So this is the other side of the coin, right? You've come in, and it's really understanding where you see venture-backable, scalable businesses that are being built that you're investing in, that is using blockchain. I'm not going to come in with that you're taking the upside yet. That's going to come next. I want to be able to really understand where you're seeing, in the traditional sense, venture-backable businesses that are scaling like crazy, that are building on chain. Both of you, just to give a couple of cases.
I think I'd like to just start from one of the basics, because something that you both just mentioned, right? Yeah. When we talk about retail and institutional, what does all this really mean? I think as a retail investor, as a retail individual, you own something. You can own something tangible, you can own an opinion. when you see blockchain and the application of all this and these words around tokenization and everything we throw out, sort of points to three things, right? It's like ownership, yield, and control of your asset, of your opinion, of your thought, of your bet. It's kind of what it is doing, right? Retail will benefit from it because when we use the word efficient, they're just going to be able to get more bang for their buck. And that's what blockchain basically does. Put simply, how do they get that is sort of where our assets come in as an institutional investor, because the companies that are building all these, I would call the highways, the rails, the pipes, the plumbing, whatever acronym you see on LinkedIn, that's kind of where venture backable companies come in. And that's why there's a reason why generalist investors like Speedinvest are coming into this realm of TradFi, DeFi interoperability, right? Like, what is this basically? We're saying, look, there's a changing wave. The way people view assets and have held assets and have traded assets, that's changing, powered by blockchain. We just need to be in the flow, which is taking advantage of those companies. Whereas obviously investors like Richard, who've been way more specialists and who've understood the space over time, may have a different take, but at least that's how we are coming in as sort of generalists, right? So.
Yeah, I mean, I wouldn't disagree with that. But there are quite a few points flying around at the moment, and I'll try and avoid making it more complicated. But first of all, on stablecoins, that's clearly a thing people are excited about. There were about $11 trillion worth of transactions in stablecoins last year. They say sort of circulation around about 300 billion. It seemed to have plateaued a little bit, but there were a lot of forecasts for the next couple of years of it growing to kind of 2 to 3 trillion. There's a little bit of a kind of a pause that seems to be connected with regulation in the US. Maybe I've seen there's a little bit of a backlog of people who are adopting stablecoin amongst major institutions for various types of payments, from treasury, massive treasury payments, through to kind of tiny sort of consumer level payments. It just takes time for some of that technology to be digested by the traditional players who need to bake it into their offerings and make sure they're compliant and so forth. So I'm still sort of optimistic about that. So that's one topic. We're excited about that. Another topic, this question of retail versus institutional. Let me try and frame it just for a moment. I think when we had this first explosion of initial coin offerings and tokens that were issued for lots of different projects, it's essentially having a kind of public market for venture-style early-stage projects. And actually, it's a feature that you issue these tokens and get them to the hands of the community early, because you're wanting to get ownership by the community, because everyone can participate and have the upside and do stuff, maybe hopefully governance or be involved in delivering the validator network, etc. Okay, without getting into the details. It was important, but at the same time it's a problem, because the reality is that nobody knows for certain how these very young projects are going to play out. So hence you end up with a lot of volatility. And of course what you want to be doing is, hopefully, I mean, if you're a superhero, like you were describing, Tracy, you back a project that has immense long-term potential and fundamentals with a great team, and then you happen to have short-term volatility and you trade the volatility but hold on to the token for the long term. That would make you a superhero. Some people have done that and they're very, very wealthy.
Or you have the layer and you're actually holding on to the token, like near.
So, and that's, but that would still, that would be a project like, any other. But the other thing that's happened is that there's been a big pushback on whether or not token economics are valid. They clearly are valid for some of the large chains, but we've entered an era when people have to prove that the cash flow actually is going to be coming over time to merit the value in the underlying token itself. So we're in a new era from that perspective. So I think the bar is much higher in terms of just launching a token and hoping it's going to work. Certainly, you're not going to be able to make money just from launching a kind of meme coin that allows you to own some piece of sort of spurious community. But back on this point, though, of stablecoins and rails that are going to be used in general, the next era, I think, that I left off on was agentic commerce. And that's where, obviously, AI is given agency to make decisions on our behalf, to own things, to make decisions, to do negotiations, to make payments, perhaps do the wrong thing and then get sued and be liable for stuff and have to have an insurance policy attached to it. So for that,
traceability.
For that, exactly. So for that, we need to be able to record all of that information, be traceable. We need those agents to have identity. But there's standards where Google and the Ethereum Foundation have collaborated, it's ERC 8004, to deliver that kind of identity. That's a real sign of the maturing ecosystem. And then you have the resuscitation of X402, I think it is, which is to enable inter-agent payments on top of that kind of reputation layer. So that's an exciting area in which people are going to be building things now. And I certainly believe that like 99% of commerce will take place between agents at some point in the not too distant future.
I definitely believe that too. So I'm going to ask one quick question for Nathalie and then go quick fire for all of you, because what we do, I think we've got how many minutes left? 15. Oh, okay. All right. I just want to, next door, we're talking about quantum. I want to be able to understand, just from all of you very quickly, a point around blockchain being quantum proof. And we've talked about how it's interoperable with AI and it's working as that background technology, because blockchain allows you to be frictionless when you're having payments, ownership, transferability, identity, the trust aspect of things. But now it's really about quantum coming in. Can it break blockchain? Can blockchain be a proof point, quantum proof? And I just wanted to hear, because I know, Nathalie, you've thought about this before as well, and whether Richard and Varun, you've got any points to add to that. And then we'll just go with the hot tips for later.
Yeah, I mean, I said to you, I couldn't say too much, but I am a little bit involved. So, so what we're worried about, quantum computers coming around, and can they break, basically, the blockchain and hack its way in and all the codes and everything. So there is a lot of thought right now about making quantum resistant and more private, confidential blockchains. That's the other element that's talked about a lot right now, because everybody can see everything on the blockchain, but do we always want everything to be seen on the blockchain? It's another thing for allowing traceability, but if I paid a merchant for something, or let's say I'm a company and I paid a supplier for something, I negotiated a rate, and then that supplier can see my entire wallet and they see how rich I am, and I negotiated a really great rate, that supplier might come back to me and go, actually, I want more money for whatever service, because they can see how rich you are, as a very simple example of explaining why this privacy is so important. There are lots of ways to circumvent that, by the way, but you get the point. I think there are a lot of people out there who are thinking about this very problem. I very much believe this will be table stakes. I think every blockchain will have to be quantum resistant. I think you glossed over it, Tracy, and this is another point, but I don't think we're there yet. I mean, quantum is one thing, but interoperability is not there yet. We still have a real problem with complicated steps across different blockchains. It has not been solved. And if you think about payments is a complicated journey with lots of different
stakeholders and steps.
Yeah, there we go. I could only think of another word. But anyway, so when you're going through it, you really need to be able to meet the needs of every one of those stakeholders, and they could be on different blockchains. They could be doing different things. So while there's a lot of things we still have to solve for, and I very much agree with what Richard said. It has to be invisible to everybody. So if you're going through these steps, nobody needs to know. I want us to be the boring plumbing that you don't see in your house. You just flush your toilet, and you never want to know how it happened. Yeah.
So I wonder if you two have got any comments to add to that.
I mean, I think, look, if quantum is ubiquitous enough to be employed in cracking the cryptography behind blockchains, then we've got quantum and we can do amazing things with that in other domains. And besides that, people are working on making sure that the cryptography is upgraded so it is quantum proof in blockchains. And we better do it in lots of other areas as well, like all of our existing payment networks and our websites and the rest of it. So whilst I don't think anyone should ever be complacent, there are people working on it. I'm sure that will be adopted. I agree with Nathalie. I think privacy is an interesting frontier for the next phase of adoption for blockchains, because not just because it makes sense for commercial and personal use, that you don't want to advertise your salaries and or your payments and supply chain, your wealth to everybody, or your trading strategy, but also because we've already seen that actually interoperability of value between different blockchains has actually worked very effectively. Bridges are becoming more and more capable. Value just moves wherever it sort of needs to or wants to. It's much harder to kind of like port or bridge, as the saying goes, secrets from one area to another. So therefore, it's in the interests of the chains themselves, whether they're supporting one particular application, which you could kind of argue that Tempo is for Stripe, where they're building to support payments using stablecoins, or whether it's a broader one. It's in the interests of those blockchains to build privacy capabilities in there to provide some friction so that they can capture some value, some activity and some value. So I think on both sides, sort of supply and demand, if you will, privacy's got a real role in the work that's going on in a lot of chains, and they're all kind of, that work is happening.
No comments.
No comment. Okay, that's great. Thank you so much. I wanted to be able to end now with a quick fire, I suppose. It's where we feel you are seeing good things happening that we need to know about that's going to be big in the next wave of blockchain. So I just wondered if there's anything you'd love to give us in terms of hot tips, because you're inside seeing things being built that are not always so easy to see from the normal TradFi, as we call it, the traditional, and also the retail investor. So yeah, Varun, anything you can think about?
Sure, I think some areas that are exciting for me is cross-border B2B in non-G10 countries. That's super exciting. Second thing is true native tokenization, not the 77% that are true just wrappers. And then the third thing is, I think as Richard and Nathalie both pointed out, is abstracting the blend between TradFi and DeFi. That how do you get TradFi users, businesses, retail individuals to interact with DeFi without realizing that the underlying technology is X, Y, or Z. But it is sort of getting the benefits of DeFi composability into traditional finance. So I think those three areas between, I would say, G10 and non-G10 countries, what's exciting me right now.
And what would you say is a key benefit? Because I think we've got mixed audience. So when you say, like, what I'm saying to the user and the retail investor, obviously, as you can see, I've got bias.
I think it's something that, at least personally, what I think is, and I see this as a retail investor myself, right? Someone who trades also very heavily, is that I'm getting all that. I'm getting ownership, I'm getting yield, and I'm getting control over my assets, right? I'm getting visibility into what I do. I think it's the broader trend of democratization of finance, right? So if you care about that, you will get that. And yes, convenience, efficiency are all byproducts of the technology, right? I think that's how
a key point. Right, Richard, what about you? What do you think is going to be big?
So I'm not going to try to slip out of this specific question as to what I see that's hot within blockchain, but I do want to say first that the way we view our kind of opportunity set has evolved over time. We got drawn the first time in which I was sort of focusing particularly on this area, it felt like there were so few projects that all you could do was actually buy Bitcoin, pretty much. It was made safe,
it was all the scam ones, you mean, that had no use case behind it.
Sorry?
There was all the ones that were seen as scams that didn't have real use case, right?
I'm talking before that, when
right.
there just were no projects.
Oh, yes.
So
no builders.
So there was nothing at all. And then obviously with a lot of projects being built, and there are still some out there, but for us we never came at it from the perspective of traders, should we say, nor as kind of anarchists who just want to stick it to the man in government or in banking per se. We always came at it as a component of a computing stack or paradigm, truly distributed, decentralized computing. So you're no longer just borrowing, servers from Jeff Bezos' basement, but you're actually, all of the compute power is made available to everybody else. A layer of self-sovereignty, of truth or trust around individuals, as I've been describing, including machines. And then a kind of a whole menagerie of, agents and AI models, both language models, but also new types like world models. And we were just in Cambridge this week talking to folks kind of pushing the frontier of that. And we frame that up as the machine economy. And so, trying to avoid dodging your blockchain question, we do see stuff as an extension of what Varun's saying, where you can, the capabilities of the kind of permissionless DeFi ecosystem can be leveraged. You can have not just US pegged stable coins, and so essentially one type of real world asset, or real world financial asset going on chain. But there will be demand, obviously, once you have them at a certain yield on chain for lots of other types that have a different risk return, therefore kind of yield attached to them. That's going to be interesting to make that work properly, because it's easy to say, much harder to do, especially when you think about how do you make sure that you have the true rights of what you're tokenizing reflected on chain. It's not a kind of a sham representation. We saw the announcements from Anthropic about SPVs and so forth. So, you know, there's important details there. And one example of that actually is I can't say that insurance is my kind of favorite sort of sector, but the concept of insurance liability securitization and capital has to be formed around that, and taking that on chain is one area we started looking at with some of our kind of partners and possible kind of portfolio companies. So that could be added to that. It would be a kind of an asset basically, but a particular one around insurance. So I think all of that is still kind of uncharted territory, clearly trillions of dollars of value for people to march down. But we're also looking at, as I said, things like world models and how this whole interfaces with a more deterministic intelligence, machine intelligence, and how that all marries up into a broader picture. We care about great founders solving real problems at the end of the day.
That's good to hear. But you gave us some good things there, so thank you, even if you feel like you dodged the question. But yeah, Nathalie, I wanted to ask you then, what do you think is going to be hot in the future? Because the real thing is that you've got the inside knowledge, right? Sharing that out with the others.
Yeah, so I mean, I feel very lucky in that I have a lot of different clients, and at Mangosteen we see a lot of different things happening. So I'm going to talk to you about what some of our clients are currently working on, I guess. One area, of course, in stablecoins is this marriage of the fiat traditional world and the crypto world. You could look at it, I'm going to use it in two lenses, as a retail and then as an institution. As a retail investor, you know, there are very few products right now out there that let you see your funds in crypto and in fiat. If you're trading, for example, very few. Robinhood might be one of the few. Varun's smiling because he's invested. But there's not a lot, right? So if you go to some of your accounts, you can't see that as a retail just because you keep talking about retail, but as an enterprise or institution also, it's separate still. And if you want to sell to a corporate treasury department or a CFO, they're not going to want to take this big stablecoin leap because it's dangerous, and their whole life is around saving the money and the risk and keeping it safe for the company. So if they don't understand or see what's happening and it doesn't match up with their ERP systems, then they're probably going to stop. And we've just seen in the market Ripple, a very big player, buy G Treasury in the US for $1 billion, because they understood that all of these corporations and institutions are not ready to take that leap, and they need to blend the two. That's just one example. Fireblocks also just brought Trez Finance. So we're seeing that happening. So that's one very interesting area. I'm going to say this is really interesting, but it sounds so boring. It's compliance. Knowing who your agent is, identifying the agent. Richard mentioned it earlier. So creating products that will be able to identify properly and on the blockchain agents as they come around before they even make the payments, and then using blockchain technology called like zero knowledge proofs in order to port that identity to different actions that they may be taking without telling anybody who they are, basically, if I summarize it well enough for you guys. But so that's a super interesting project as well. And you know, we then have some tokenization of real estate by a part of a real estate development that's being built. You might not have all of the funds, but you're buying parts of it. So it's a new way of capital, you know, capital allocation. So.
Okay, now there's some good ones there. So, I mean, we're coming up to an end now because we've only got we've got 2 minutes. But I just wanted to be able to summarise in certain ways, because we really wanted all of you to feel that blockchain technology is a technology that can be interoperable, looking at traceability, looking at the way that it actually reduces friction when you're talking about ownership, identity, it is also instilling trust, the point around understanding where the provenance of things are. And there are ways in which you can close that up and open it up for people that can see it. So it is looking at the opportunity where there is that intersection between infrastructure, regulation, and to Richard's point, real use cases that all of us can use and buy into. And that is really what we're wanting here for blockchain to go mainstream on. And it to be in the background, we don't need to be seeing it. So then it does come down to the user experience and the UX. So yeah, I think this is really where we're coming around with it. Any last words from the panel before we wrap up? No?
Thank you.
Right,
so
well, thank you for everyone in the audience. I know we're wrapping up now and I didn't take questions, but that's because you're able now to talk about this, right? So thank you for staying here right till the end. If you're coming to the after party, we'll see you there. And thank you so much for Nathalie, Richard and Varun. Please connect in with them and talk to them and continue the conversation, even with next door with quantum, because that's really the key of frontier technology. Thank you.